Most traders believe they lose because of a bad strategy, not enough indicators, or the wrong trading system. But the truth is far more uncomfortable. Most traders lose because they never learn to control themselves. They lose because of their mindset, their emotions, and the psychology behind every decision they make. Today, I'm going to break down the real reason traders fail, and how you can avoid becoming one of them. Let's start with a simple fact. The market is not your enemy. The market does not know who you are. It does not care about your stop loss or your take profit. The market is neutral. The real enemy is the person in the mirror. Most traders lose because they fight their own emotions every time they click the buy or sell button. Fear, greed, impatience, and unrealistic expectations destroy more trading accounts than any chart pattern ever will. And yet, these emotional traps are ignored by most beginners. They think psychology is optional. They think discipline will magically show up later. But nothing could be further from the truth. Let's talk about the biggest silent killer in trading: revenge trading. This is one of the main reasons traders blow their accounts. After a loss, you feel the need to get your money back quickly. Your mind convinces you that the next trade will fix everything. But this is a lie. Revenge trading is emotional, not logical. And emotional trading always ends the same way, with bigger losses and deeper frustration. Another major reason traders lose is the lack of a real plan. Some traders claim to have a strategy, but they don't have rules. They don't have clear entry criteria, exit rules, or risk management. They don't know how much they are risking per trade. They don't know when to walk away. Without structure, every decision becomes emotional. And emotional decisions create emotional results. Winning traders don't rely on emotion. They rely on process. They follow a defined plan, even when it's hard. They allow the system to do the work instead of their fears and impulses. The difference between a struggling trader and a successful one is consistency, not intelligence. The consistent trader shows up with discipline and follows the plan. The inconsistent trader shows up with hope and reacts to every candle. One of the biggest psychological traps is overconfidence. After a winning streak, many traders start to believe they can't lose. They increase their lot size, break their rules, and take unnecessary risks. This is when the market delivers a painful reminder. The moment you think you have mastered the market, you stop respecting it. And when you stop respecting the market, it humbles you instantly. Another trap is hesitation. You see the setup, you know it matches your plan. But you hesitate, you wait too long, you doubt yourself. By the time you enter, the opportunity is gone. Or worse, you enter at the worst possible moment. Hesitation comes from fear and lack of confidence. And confidence comes only from practice and proven rules. Let's talk about the pressure to win. Many traders feel like every trade must be profitable. They believe losing is failure. But the truth is that losing is part of the game. Even professional traders lose regularly. The difference is how they respond. Pros lose small, controlled, and calculated amounts. Beginners lose emotionally, impulsively, and heavily. You don't need to win every trade. You only need to manage your losses and protect your capital. Another reason traders lose is because they trade to feel something. They trade out of boredom. They trade because they want excitement. They trade because they want to escape their daily life. But trading is not entertainment. Trading is a business, and a business cannot run on impulse or emotion. If you trade for excitement, you will pay for it with your losses. Let's talk about discipline, the most important psychological skill. Discipline means doing the right thing even when you don't feel like it. It means closing the chart when your rules say, stop. It means sticking to your risk management even when you want to increase your size. It means waiting patiently for the right setup, even if it takes hours or days. Most traders lose because they cannot control their impulses long enough to follow their own plan. Another major point is unrealistic expectations. Many traders come into the market wanting fast money, instant profits, or quick success. This mindset leads to frustration and poor decisions. Real trading success takes time. It takes repetition. It takes learning from mistakes, adjusting your plan, and staying patient. The market rewards discipline, not desperation. Let's break down a simple truth. You are not competing against the market. You are competing against your own emotions. You are competing against impatience, fear, and greed. You are competing against every part of you that wants shortcuts. But here's the good news. If you master yourself, you automatically rise above most traders. Consistency is not created by analyzing charts. It is created by building habits. The habit of following your rules. The habit of risking small. The habit of reviewing your trades. The habit of walking away when you're emotional. These small habits are what separate long-term winners from short-term gamblers. Another key reason traders lose is because they avoid responsibility. They blame the market, they blame their broker, they blame the news, they blame anything except themselves. But nothing changes until you take ownership. You must accept full responsibility for every click you make. When you take responsibility, you regain control. When you blame others, you lose control. Let's talk about the most powerful skill a trader can develop: emotional neutrality. This means not getting too excited when you win and not getting too upset when you lose. It means approaching every trade with logic, not emotion. When you become emotionally neutral, your decisions become clearer. You see the market for what it is, not for what you want it to be. Here's a secret few traders understand: you don't need to remove your emotions. You just need to manage them. You are human, and emotions will always be part of trading. But discipline allows you to act despite your emotions, not because of them. Successful traders feel fear, but they stick to their plan anyway. They feel greed, but they stick to their risk limits anyway. This is true mastery. Let's also talk about patience. Patience is one of the hardest skills for traders to learn. Most traders lose because they act too fast. They force trades that are not there. They chase the market instead of waiting for the market to come to them. Patience is what keeps you out of bad trades. Patience is what keeps you focused. Patience is what protects your capital. One of the most damaging habits is changing strategies too often. After a few losses, many traders throw away their plan and search for a new system. They test new indicators, new strategies, new settings. But this constant switching prevents them from ever mastering anything. Traders lose not because their strategy is bad, but because they never stay with it long enough to understand it. Let's talk about the root cause behind all of these mistakes. Most traders lose because they don't know themselves. They don't understand their behavior, their triggers, their emotional patterns. Self-awareness is the foundation of trading psychology. When you understand yourself, you can build rules that protect you from your weaknesses. When you ignore yourself, your weaknesses become your biggest threat. The path to becoming a successful trader is not about finding the perfect indicator. It's about becoming the version of yourself that can handle pressure, stay calm, and make disciplined decisions. Trading is a mirror. It reflects your strengths and your weaknesses. If you want to grow as a trader, you must grow as a person. Before we end, here is the most important message: you don't have to be perfect. You just have to be consistent. One good habit can change everything. One rule can protect you. One moment of discipline can save your account. Focus on improving a little each day. Over time, those small improvements become powerful results. Most traders lose because they ignore the one thing that matters most: their psychology. Don't be one of them. Protect your mind, protect your capital, and remember, when you master your mindset, you master your trading.